FreshForex turns 15. A birthday is a good reason for gifts. FreshForex will give presents to all clients of the company. We will give away $15,000 among our new clients. And 15 ounces of gold will be raffled off among our active clients. Take part in the celebratory raffle and get your prizes. FreshForex turns 15. A birthday is a good reason for gifts. FreshForex will give presents to all clients of the company. We will give away $15,000 among our new clients. And 15 ounces of gold will be raffled off among our active clients. Take part in the celebratory raffle and get your prizes. FreshForex turns 15. A birthday is a good reason for gifts. FreshForex will give presents to all clients of the company. We will give away $15,000 among our new clients. And 15 ounces of gold will be raffled off among our active clients. Take part in the celebratory raffle and get your prizes. FreshForex turns 15.
Hello, good afternoon everybody. I hope you can see my screen and also hear my voice clearly. Today we are going to look at something else. So far we've been discussing just certain strategies, but today we want to refine something which we looked at some few days ago. So the first thing which I have to say today is that I'm going to give you guys some strategy, but then do not rely so much on that strategy. That's the first thing. The most important strategy normally is the amount of risk you're willing to put in. So if I tell you that you're supposed to buy when prices are maybe at this point, the most important thing is not actually that level. The most important thing is the amount of money you are willing to lose in that trade. So think of it like anytime you enter trade, you actually give opportunity to make money from somebody else. I mean, anytime you enter trade, maybe you enter sell here, you give someone else an opportunity to make money from you. And anytime somebody else enter a trade the same place, they actually give you the opportunity to enter trade, to make money. That is if price does goes against them after that. So the most important thing normally is not the strategy you have. The strategy, every good strategy must have a risk management to it. So whether you're following a trend, whether you're following whichever you choose to trade should be your number one priority. So I'm going to look at just a few indicators, some of the fewest indicators that actually you can use to get trend well, and then I'm going to give you some candles that can help you at least gauge if the trend is still continuing or we are reversing. So the first thing you need to know is the close of candles. This is a candle. What do you think about the close of candles? Do you normally use them, or a candle is just a candle? If you have this, let's make this red. This red candle. I'll put a tail to it like this. These two will make red. So anytime you see a candle, don't just look at this as a candle as a whole. Look at what this means, the tail at the bottom and also the tail at the top. Look also at this opening price and the closing price. All of them say the same thing. They give us a very useful information, especially when you want to find the trend. We also have a candle that may look like this. Then we also have this should be green. Never ignore the opening price and the highest and the lowest and the close of prices. All these are here for a reason. There is no way they can be there for no good reason. If you see a candle like this, understand very well that the close of that candle is as useful as the high and low and the opening of that candle. So if you want to know exactly what's happening, assuming I'm looking at this chart, this is SP500. Look at what happens from this point. When the price was here, it went up, it continued down, it continued up again, then there's a correction, continued up, a correction, it continued up, a correction, continued up, correction, it continued up, and there's a correction. So how do you know that this price is going to continue upwards? The first thing you have to look at is to look for the lows of candles. If the lows of those candles keep on rising, that like if we have a low, the first time there was a low here, then the price continues up, and then the low after that, the previous one, is actually above the previous one. We have this is another low which is now above the previous one, continues up, then we have another low which is above the previous one. This formation only means that we are still continuing upwards. If you find that the lows of candles keep increasing, that you find that if the previous one was the lowest, then the next low actually is above the previous one, it continues up, then the next low is above the previous two. That means we are still continuing upwards. So this is the only simplest way you can know that the price is still proceeding to the upper side. And if price, like assuming you have a candle like this one here, that candle opens below the low of the previous one and then closes above the high of the same previous candle, that means you're still continuing to the upper side. So you cannot be looking for a sell if something like that happens. If you have price forming higher lows, that something like this, the price forms a low, higher low, higher low, and even further higher lows like this. This simply means we are still continuing to the upper side. There's no way you can be looking for a sell when this happens. And if price proceeds up, only at this point we saw a low which went lower than the previous one, but then the circle continued. When something like this happens, you only need to mark this and then do away with this part here. Then we now have something known as the false break, which is this one. So the break which you saw below the low of the previous one was actually not a change in trend, but just a false break, which means we are still continuing to the upper side. So after the false breakout, the first retracement to this line here gives us the correct place to buy from. Does that make sense? If it makes sense, just put a plus sign. Yeah, put a plus sign. I'll be able to respond to that. Or if you have any questions, if you've not understood exactly what I've said, you can still put the star sign, which plus sign. I'll be able to see, or put the minus sign so that I'm able to see exactly that you're not understanding what I'm saying. Okay. So what I was saying is this. Let me clarify. To know that the price is continuing in the particular direction, you have to look at the lows of the candles and the highs of these candles. So if there's a low which was lower than the previous one, then the next low which follows that previous one is actually above the other one, and then it continues like that for some times, that means we are still continuing to the upper side. That's what that means. So if you had this low here, you had the first one, the low was lower than all the candles. This was the lowest low. It proceeded up, and then we had this, we had this one here. This is also another low, but it's above the previous low. This one, this is a buy. It continues up, it comes back to the lower side, but cannot reach the low of the previous one. Like this, continues up, and the same thing. What this simply means is we are still continuing to the upper side. Anytime there's a change in trend, like if the price is going upwards now, then it changes to the lower side, there are chances it will break below the lows of this previous candle. If it does not do that, that means you're still continuing upwards. So you need to hold on to buy positions as long as this is true. As long as you have candles closing above, like if you have something like this, you have a candle which opened here and then closed above the high of the previous one, that confirms an uptrend. If the same thing happens while the lows are still above the lows of the previous one, we are continuing upwards. Therefore, you need to hold on to buys. Does this make sense? So the same thing applies to when we are looking for a sell. If you have a case where the price is moving downwards, let's look at one. We have USD where the price has been downwards for some times. If you have something like this, look at how perfect the price has been continuing to the lower side. Then this is the highest high we've seen since 2018. We had this here as a resistance. Then the price proceeded down. It came back. We had this as a resistance. And then it continued down. It came back. Then we had that as a resistance. Then it continued again down. It came back. Then this was a resistance. Continued down. We are now waiting for price to give us a possible resistance here. So if you look at this properly, this is actually the highest high we've seen so far from 2018. It continued down. Then there was another, this was now a lower high compared to the previous one, which means we are still downwards. It retraced up, another lower high, and then it continued down. Then there's another lower high. So what this formation means is that we are still downwards. You cannot be looking for a buy on this one even when the price moves upwards. So the most important thing normally is not even to understand what is happening in this week alone. Understand what has been happening overall for an extended period. If you know very well that for the past 6 years we've been moving downwards, then just the previous 2 weeks the price is upwards. You cannot find yourself buying such a thing. This is one way you can know the trend. And if price keeps too close, like if this is a downtrend and then the price keeps closing below the lows of the previous candles, that confirms continuation. So you can see that here. Look at from this point here, after this consolidation here, whatever I'm saying actually happened. You can see there was a break. This candle here opened around that point and then it closed below the low of the previous one. That is a very good continuation sign. You need to look for things like this. Anytime you have consolidations, then the candle which actually breaks out of that consolidation closes above the high or the low of the previous one. It confirms continuation. It means that we are possibly headed to that direction where the price has broken to. So if you have this one here, then candles open here and then it closes below the low of the previous one. That means we are still down. So you look for a sell immediately. And if the same thing happens, like in this case, we have that this is a sell, so you hold on to a sell. If the same thing happens now here, this is still a sell. So you can see the candle which closed as a pin bar, this one, it didn't close below the low of the previous one, which means although we are still downwards, there are chances we may reverse to the upper side. So if the next candle now closes below the low of the previous one, that is still a sell. You sell up to when this happens here, and then you get out. Does this make sense? So somebody is asking, how comes I'm not buying the next immediate candle, this one, this candle here? How comes this candle actually closed above, but then I'm not considering a buy? The reason is simple. If price has been closing below the lows of the previous and severally before, if you see a buy now, immediately, don't be in a rush to pick this buy. This could just be a retracement. So as we've seen, it was true that this was a retracement. The price basically just consolidated and then it continued down. Does that make sense? So we'll not find ourselves buying just because the price has closed above the high of the previous. This looks very good, but then the previous dominant trend was actually downwards. So you cannot sell, you cannot buy what's going downwards, and you cannot sell what is going upwards. If price continues to close below the lows of the previous candles, keep looking for sell positions. If price continues to close above the high of the previous candles, keep looking for buy positions. That is simply the best way to do it. So the trend rules everything. If you don't know the trend, don't trade anything. And if you can't find a candle closing above or below the lows of the previous candles, that means there's no clear trend. So if you had this, assuming you had a level there, so as I was saying, assuming we have this level here, this is the daily highest high, and then this is the daily lowest low, and there's a candle in between which is actually red. I'll put this to be red like this. So this is the highest high, the upper line is the highest high, and the lowest line is the lowest low. Assuming you have a candle like this, if the next candle does not break above this high, there are less chances we are going to continue to the upper side. So if you find that the next candle, this is a daily chart you're looking at, the next candle does not do anything, like it does not even attempt to break above the high or the low of the previous candle, that means we are still in some range. There's no way, there's no clear trend. If you find something like this, just a second, if you find something like this, that despite the fact that the previous candle was such a big red candle, the next candle does not do anything. It does not break above the high of the previous one, and it also does not break below the low of the previous one. If this happens and you're looking for a trade that day, do not do anything. Do not trade anything. There's no this indicates that there's no clear trend. But if this happens, that the next candle actually opens inside the previous candle, but then it closes above something like this, this confirms an uptrend. So anytime you have a high and a low, then the next candle closes above that high or low, then that means we are continuing in that direction. You need to look for a trade. Sorry, I thought there's a problem in my connection. I should be now back. You should be able to hear my voice clearly. So as I was saying, anytime you have this, monitor this properly. Do not forget, anytime you have a high of a candle and a low of a candle, then the next candle does not do anything significant. What I mean by significant is it does not break above the high of the previous one or below the low of the previous one. Do not do anything that day. But if it closes above the high of the previous one, that means we are continuing in that direction. So you should be looking for buy positions. This gives us the confirmation that we are now continuing upwards. So the same thing, if this candle here gives us a new high, the current candle now gives us a new high like this, but then the next candle, which is now red, does not do anything, it remains within the boundary set by the previous one, then that means there's no trend. So you don't find yourself trading that day. Only trade on days when price has closed above the high of the previous candle, or when it has closed below the low of the previous one. That's the only way you can weed out like consolidation, because I'm sure somebody was trading in between this range here. Yes, it looks really good, but then notice if somebody is doing this, he actually wasted a lot of time. The only place he could have traded which was not a good one was this one. After this red candle closed below the low of the previous one, this was supposed to be a sell the next day. But if that didn't mature up, there is no other trade again, apart from this day that price has gone below the low of the previous one, this one. So it will help you weed out these places where you find yourself trading and then nothing happens. This is the best time to trade when the price has closed above the high of a candle. Look for a trade from that day. If price has closed below the low of a candle, look for a trade on that. But if price remains within the high and the low of the previous candle, you don't do anything. Exactly, that's one way. If you don't have an indicator which can support the trend, you can use that to help you understand where we are going. If price is going up, it should be breaking above the highs of the previous one. If price is continuing to the lower side, it should be breaking below the low of the previous one. So I've used a weekly chart. Not that you should look at the same thing on the weekly only. You can do the same even for 1 hour. You can do the same for 30 minutes, but I've not used the same thing for 15 minutes because I don't do lesser time frame. So does this make sense? I hope this makes some sense. So even with this at hand, even after you've known that when price breaks above, like in this case, if price does something like this, if price sends a tail below the low of the previous one but does not close below that low, that is still, there's no clear trend for me. So I won't trade anything like this. If price sends only a tail, like we have price opening here, going as high as this point and then goes as low as this point, but ends up closing in between the previous one, there is nothing there. That's not a change in trend. It does not mean we are continuing. We are still consolidating. So if price could have closed below something like this, that's the only time we look for a sell. This is the only way you can confirm that we are continuing to the lower side. So when the next candle opens, we are now downwards. We are supposed to look for a sell. Don't be in a rush to buy anything. You may find that the price is continuing to the upper side even after closing below. Wait for it to retrace back up to this point where the third candle from the current one closed here, the low of the previous one, this one here. So we'll not sell it that just because the price has closed below, but we'll wait for retracement back up to the low of the third candle. This is the first one, this is the next one, this is the third one. So we'll not sell even though the price closed below the low of the previous candle. We want a retracement back up to the low of the third one. Then we'll be able to pick a sell from this point here. So if this does not happen, and the price actually continues even higher, it may invalidate the sell which you saw. So you need to be observing this one properly. Wait for that retracement, pick a sell, and expect that sell to go up to the moment when price now begins to do the opposite. That is, when it begins to close above the high of the previous one, you exit the sell which you had previously. Does that make sense? You can ask me any question. If this does not make sense to you, you can still ask me any question. Basically, whatever I'm doing now, this is just price action. There is no indicator. I have not attached any indicator. There is no indicator on my screen at all. So you might have seen for the few times in the past, I actually mentioned that there are some indicators you can use for understanding the trend. Yes, it is true, there are indicators you can use for trend, but then you as a person must understand where the price is going first before you attach an indicator. So once you've seen that this is now a sell, you can now go to your list of indicators. These are the indicators. We have I'll use this one. This is alligator. You can now attach your indicators and then use them to help you confirm exactly what you already know. So when this is a sell, the indicator is showing you a sell, the setups you're seeing are showing you a sell, you're now free to hold on to that sell. So even better, like I'm not on this weekly chart for the sake of it. I'm here because if you can find a good trade on the weekly, it will help you hold on to a trade even for a year. So if you're that person who likes trading long term, you can pick a sell. When this happened and the previous candle closed below the low of the previous one, somebody could have taken a sell here, and if that sell had closed below the low of the previous one again, then that was a sell. So you hold on to that sell as long as this indicator and the price is showing you that we are selling. Is that clear? So basically the one we are seeing now, if you took this sell around this point here, you should be holding on to it up to somewhere around this level, 1.0487, this point here. So that should bring us to the end. It has been a brief one. That's the only thing I want to talk about. The lows, the lows of candles, the highs of candles, the opening of candles, and then the closing of candles. So another thing, if you have something like this, if you have a candle which is green, then the next candle does not open within that candle, such that it actually opens below the low of that candle. That's another very good continuation sign. So if you see something like this, that a candle has actually gapped above the high or below the low, that confirms a direction. So you need to look for a trade in that direction that has gapped. If it has gapped above, you look for a buy. If it has gapped below, you look for a sell. Does that make sense? So I'm waiting for more questions. The indicator which I looked at previously, that's MACD. MACD is actually an oscillator. MACD is not a trend indicator, it's an oscillator. That's why I'm not talking about it now. But the best indicators which you can use to show you trend, the very best one which I use is called ADX, Average Directional Movement Index. This one. This is the best one. If you want to trade correctly, you can use this one. You can use this. This is actually the best one. I really like it. It gives me the correct direction. So how it works is it has 2-3 buffers. That's the first one. This is the blue line on top. This is the main one. And then we have this, the red one. Red one stands for sellers. The green one stands for buyers. Then the main one stands for a trend. So as you can see, there's also a line here which I've not talked about. There's this horizontal line, this level 25. The main one relies on this line here, 25. Anytime you have the main one above 25, it means there's a trend, but it does not indicate which trend. But anytime you have the main one above, below 25, it means we are consolidating. So you're not supposed to look for a trade when that's happening. Like, look at this here. We have from this point here, from this point here, the main one has been above 25, which means from this point up to this point here, we had an active trend. And then from this point here, there was no trend. There was no trend, and even on the charts you can see we were actually consolidating. There's no trend. From this point to this point there was no trend, but then from this point to this point here, we had an active downtrend. So if you want to get this correct, like, you have to combine this, to combine almost everything, put together price action with the indicator you're using, in this case the ADX and the alligator indicator. Put all of them together, combine that with the risk management strategy, the one you have, then you'll just be right. The problem comes when you have a good strategy but don't have a proper risk management. You lose everything. And if you have a proper risk management but you don't have a good strategy, the risk management strategy will help you. So that's another thing. Ensure you have a proper risk management strategy. Combine that with a trend, with indicator that shows you correct trend, and then use the trend to pick trades. So I've mentioned exactly how you can know the trend if you don't have these indicators, but they come by default on MT4. If you are asking me where I got this indicator comes by default by MT4. I don't have to provide a link where to download it. No, there's no link for that. It comes by default. As long as you have MT4, you'll be able to have it. Does this make sense? So don't be deceived. All the other indicators you see, all the custom indicators you can see online or whichever, all those indicators, they have actually been developed from these indicators, the ones we already have by default. So we combine this one, we combine this indicator with this one to come up with one indicator which shows us the trend. That's one way you can do it. Or you can come up with your own indicator, but rest assured someone else has developed something like that and is available here by default. If you check this list here, these are a list of almost all the possible indicators one can use. Listen, there are several. All this list, the list you are seeing here, they're actually the same indicators, but then you combine some to come up with their own. If there's no any other question, I think we need to wrap up. We need to leave it at that we meet again next week. If you have any questions, just feel free to ask me, post them under the chat option, or you can leave a comment. Either way, I'll give a response. Thank you. See you.
Forex turns 15. A birthday is a good reason for gifts. FreshForex will give presents to all clients of the company. We will give away $15,000 among our new clients. And 15 ounces of gold will be raffled off among our active clients. Take part in the celebratory raffle and get your prizes.